Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter. I'm going to share a bunch of wealth, financial, or commodity related topics that people are talking about. Obviously, I'm going to interject my financial opinions alongside it. And we'll go through a bunch of different stuff that Twitter's sharing. If you need any help with anything, check out finding-value.com. I can help you with stuff. And we're going to get right into the discussion here. So again, if you want to follow me on here, it's at finding_finance. And the website is here. First one is Finding Finance. Thoughts on the BTC fractal overlaid on URA. URA is uranium. BTC is Bitcoin. So if we were to look at this, what he's doing is he's showing this potential fractal. A fractal is a repeating pattern that we've seen people trading in with each other. It's the psychology of the herd mentality. And what he did is he overlaid BTC's price over URA and said, hey, look, what do you think of this? And remember about the yield curve that we're talking about, the inverted yield curve and a potential slowdown that could occur. This is very much possible that we could get a pullback in the short term. Now, I know he's got BTC overlaid, and it depends on where, what occurred during this pullback. And here's the tough part, guys. And this is always going to be kind of the tough part. We want to be bullish and we want to have a bullish mindset from bottom here all the way up. We want to be bullish. There's going to be some pullbacks along the way. And are we here where we could get a pullback in the short term? It is very possible that we could get a pullback from a slowdown in the overall markets and we get something. Here's the thing. It's not guaranteed. It's not 100% in the bag. And that is where I get scared for those that are in this because I want you to reap the rewards of this bull market. And we can use all of these patterns. We can try to line them up as best as we can. But nothing's going to move exactly the same way. Things will rhyme. Things will be very, very similar. They will not be exact. So this is a really good fractal. We very well could have a pullback. I am very reluctant to say, to sell out of my shares and try to time this in the short term. I think we are going way higher. I am very much bullish, but here's the thing, guys. If we get this pullback, everyone and their mom is going to tell me that I'm wrong. They're going to say, Finding Value, you or Andy, you are wrong. There's no bull market. This thing is done. It's going to be in total disbelief phase. No one's going to believe that this thing is coming. It's going to be volatility, and I think that wave 3 is coming. We're either in it or we get one last fake out before the breakout. Very well possible. We can also look over at crude oil. Crude oil has roughly the same fractal as Bitcoin. The fractal I took, just to show you guys the fractal that I took this fractal here and I moved it and expanded it over here. So that's the fractal I took. I moved it over here. Now, if we look and we kind of zoom in over on this side here, you can see that the way that this moved, the fractal and the underlying move, are all very similar. This one pulled all the way back to about $50 from 120 something all the way back to 55 to get the full pullback. Now, does that mean that we're going to get that pullback? I don't think so, guys. It's not in the bag. We pulled back to the heavy support level, which is this level here. And if I put it on logarithmic, and I'm going to have to zoom way back in, I put it on logarithmic, and what we did is we just did basically a retest of that line. So that is very plausible that retest is done and that we are going to start to move into the next phase here for wave 3. So this would be wave 1, wave 2, and then wave 3 is this big boy that goes way up there. I put this on non-logarithmic just so it doesn't look ridiculous and it's easier to handle with this negative. But that's what it looks like overlaid. I went to the bottom to peak. It went down and then we went up. And this is what it looks like last bull market coming on up. This is kind of like almost if I were to draw some on here, almost like an accumulation cylinder here, where we go 1, 2, 3, 4, 5, 6, 7. We get the hump and then we get the break. The big old move of that accumulation cylinder. You get one pause, which is this guy here. That is the pause here. It's that whole thing. It's this whole thing here. That's the pause that Livermore had watched. Then you get one final peak, and that is it. That is somewhere in this range is the end of the bull market. So we had the accumulation cylinder. So what we want to be looking for is an accumulation cylinder here. That's really what we want to be looking for. You can look for it in crude oil. I think uranium is going to be trading alongside crude oil, or crude oil is going to be trading alongside uranium, however you want to say that. And I think we're going to create a pattern right where we're at somewhere where it's accumulating. I am seeing a ton of accumulation patterns that look like this all across different sectors in commodities. It's all over the place. So I am very positive, or very, maybe not positive is the right word. I'm very excited about what's coming. I'll just put it that way. I'm very excited. I don't want to say that I for surely know the path. I don't think anyone does. And something in the market could happen. It could be news that comes out, something that occurs. It could be war. It could be, I don't know what. I don't know what it is. There could be something that comes out that draws us down like that before we go higher. And really, it would look something on the lines of like that, where we come back down. Again, I don't know if something like that's going to happen. It looks like to me that we're in wave 3, but I could very well be humbled in an immediate second with some sort of news that comes out, or an attack on America, or whatever the heck it is. All right. But I do think this is going to occur. I just don't know the exact path if we're out of this pullback, or if we get a slowdown in the market. Now, I don't think, if I were to take a guess, I don't want to guess. What I'm going to do, my strategy is to ride through whatever comes. If we get a little hump and we get a little fake out, a shakeout before the breakout, very well could happen. So nice chart. I like that you're looking at previous fractals and trying to line this up. My strategy, if you want my strategy here, my strategy is to play the entire bull market. It's not to try to time the short-term stuff. So if this is what's coming, or something on that derivative of it, which I think this is very possible to get up in this range here or even up here, very possible depending on the market conditions. I want to buy it, and which I did is I bought it down here in that general area, and I want to ride this whole thing and sell it somewhere in this area up here. That is my goal. That is what I hope happens. Or I sell it here, and I rotate it into a better opportunity. Perhaps it's gold and silver, and maybe they kind of all go up together during this portion. This will pull back, and this will keep going up. I don't know yet. I have to see what that looks like. I have to see the chart patterns and all of what that looks like. Last bull market, we did have gold and silver take off during this phase here. Then we had a pullback in 2008 was actually over here. This is 2008 here. That's where you want to rotate a whole bunch of money at this bottom here into your gold and silver little mining companies. But again, I don't want to say with any sort of confidence like I know what's going to occur. I don't think anyone knows what's going to occur with any sort of degree of certainty. So there could be things where they come out and they do a stimulus or QE or bond, something with bonds to stabilize the market, and this thing just rips. So I want to be in it for that. I don't think it's going to rip like overnight, but again, we very, very well could have that pullback that you have on that fractal. Now I'm going to grab this crude oil. Let's just go look at BTC. Let's pull up BTC real quick. The fractal that I think you have is probably this fractal here. Let's overlay it and see what this thing looks like. There's the big move there. Let me see if I can get this thing all aligned here. I think what is kind of occurring there, I can kind of stretch this thing out. Then we can go back over. I'm just trying to play with fractals here. There we go. But I think what occurred is you had this big run up. It pulled on back like this. It went up again like that. It has the same type of fractal here. It shot all the way up, but this was an over, big move lower. So this down here is like maybe perhaps down there. But you can see that the overall shape is roughly the same here and how this thing moves. It just had an accentuated downward move potentially. But yeah, that's what we've got. Not a huge alignment there, but this looks pretty close. I know Scott put Ethereum on this as well, and it was a very well aligning fractal. Really doesn't get much more epic than 50-year chart patterns. We will see eventually these in classical chart trading books. Else, I'll have to write my own book. He's got a couple of different things here. He's got Sugar's epic 50-year base morphing into existence. He put a trend line on top of it, and we're about to break that to the upside. If you didn't know, for some reason, sugar and silver are highly correlated. So we can see a big break here on the right-hand side. The dark line here is silver. Sorry, the not so dark line is silver. So silver's come on, and we're about to break to the upside for silver. The dark line here is inflation. So this is the inflation and the waves. We've got one wave that we've broken this downward pattern here. This pattern is the same pattern that looks like this, which is the same pattern that looks like this. And we're all at that breakout point. So if we get inflation to go back up, which I definitely think we will, it's going to unlock a gigantic move in sugar and in silver to the upside. I do think that platinum, silver, and gold have the highest or best risk-reward profile of any investment asset in the market today. Why do I say that? Because the risk there is so low, and I think there's a lot of upside potential. So I think this is a good time to be looking at those assets and figuring out how you want to allocate to those assets. That's kind of how I would take my approach to it. Here's Tavi. He says, substantial room for growth. The Brazilian market used to be 6 times larger than its current share of global equity market. Market leadership evolves over time, and economies that led in previous cycles go through their own periods of revaluation until they return to historically cheap levels. This has been the case with Brazil since the global financial crisis. What he's describing is the real estate cycle, if you want to know. He just doesn't know it. The country's relevance is intricately linked to the performance of its resource industries, and the current scenario is no different. He's just saying we went up 716% from bottom to top, and we're at a very low level where we could maybe perhaps repeat that again. Coming back, American checking accounts have 3 trillion higher than before the pandemic per Bloomberg. Remember those checkable deposits that we were looking at with Scott and myself? American households saw their checkable deposits soar by more than 3 trillion during the pandemic, and we're still at very high or elevated areas. This hasn't drawn way down yet. I know the savings rate that people talk about has come back, but the money, at least in a lot of people's accounts, is still there. It hasn't gone away yet. Paul Volcker effectively replaced gold with the concept of Fed credibility. In 2020, Jerome Powell announced a review of monetary policy that revealed him as an inverse Volcker, determined to do what it took to bring inflation back. So what occurred here is bond prices. This is bond prices. The bond market appears to be reversing its historic shift. This was the 40-year decline in interest rates, which pushed bond prices from the early 80s upward. So what that was is we had very high interest rates back here, and they lowered interest rates this entire time, basically. Now what we've got is the inverse of that. We have very low interest rates here, and they're increasing, which is going to bring bond prices way back down. The best time to buy stocks is when interest rates were low in this general area of the early 80s. The best time to buy stocks was right here and ride it all the way up. I think it's going to be rough for stocks even as interest rates go up or remain elevated and money rotates into commodities and precious metals. This is such a big opportunity for anyone who's paying attention and knows how to play these markets. Commodities are going to crush it. Same with precious metals. Yes, people are going to be in the disbelief phase right now. They're not going to believe it. That's exactly where we're at. And when people come rushing in, it's going to go to hope, and it's going to move into euphoria at some point or optimism. And we're not there yet. We're still in disbelief, and people do not believe the potential returns that could come. They think, oh, uranium's going to do a 2x at best. In terms of some of the equities. There's no way, guys. I'm sorry. We could obviously pull back in the short term, like I was talking about with that fractal up here. That is possible, but what's coming, this is the first wave, the third wave, and then the fifth wave. And then it usually goes back down. And sometimes you get an extended fifth wave. This is the first wave, big picture view. Then you have another smaller wave, first, third, and then fifth. And then this is the last fifth push. Sometimes this goes into an extended fifth wave, sometimes it doesn't. But right now, we are so low, and this all has to reverse backward, back to this, I think, back to the early 80s area, where we're going to go way down in bond prices, way up in yields, and a big rotation of money is going to occur, and people are going to view assets differently. They're going to view bonds as crap. They're going to rotate money over to precious metals, just like the central banks are doing today. They're buying a bunch of precious metals and using that as assets. I think that's all going to come. We're still early in that rotation process. Jim Bianco says TLT has been an incredible ETF over the last few years. It has seen about 40 billion in new money flow in, making it a top 5 ETF by this metric. Yet, with all that money flow coming in, it has declined by 46% over this period, making it a highly efficient cash burning machine with those increasing interest rates. Peter says tax receipts are collapsing, which happens when deep recession is coming. So for those keeping track at home, Biden took a gift wrap post-pandemic recovery and turned it into the worst stagflation in 50 years, on top of $2 trillion a year in deficits, apparently forever. This is your state and local government current tax receipts declining here, back to 2019 levels and falling fast. This is going to cause havoc on the interest payments for the debt because your income is declining in terms of taxes, and it is going to create a larger gap as interest rates remain high in terms of deficits. I talked about this, 42 seconds that every investor should listen to, Peter Lynch on market volatility. What he said is he likes market volatility because he could buy shares cheaper. And he made a boatload of money. He talked about Taco Bell. He bought it at $7. It went all the way down to a low of $1. He bought more on the way down and held it and eventually sold it for $42 later on. It was one of his largest holdings in his fund, what he was talking about. U.S. Treasuries are now more volatile than gold. So U.S. Treasuries are now more volatile than gold. You can see back in history that was not the case when you started back in 1980 when they were lowering interest rates. But now it's changing. All of this data and all this stuff that's changing, these trend lines that are breaking, that are 40-year trend lines and 50-year trend lines, sugar breaking the 50-year base, silver about to break its 50-year base. That is all saying something. They're all in alignment telling you that inflation is coming and that money is currently rotating as we speak. And it's going to rotate in a big way when more and more people become aware of this. And I'm just waiting in the assets where the money's going to rotate into. At least that's the way that I view it. A bunch of warmongers. The U.S. military is ready to conduct airstrike across all of Syria and Iran if Israel gives the word. U.S. is fully committed to defending Israel. War will spread soon. I hope it doesn't, but I will say this: commodities and oil, all these inflation-sensitive assets are going to go up during war. It's generally a high money printing era. And it's almost as if they need a war to print a ton of money to devalue or debase the currency and the debt that we have. It's almost an excuse to print. 8% higher gold price in China compared to the United States. Now, this is weird. We're starting to see these disconnects between China pricing and the United States pricing, almost as if we are trying to hold the price of gold lower. I do think that China has an incentive to drive the price of gold up, to basically soak up all of the physical holdings in the world, and then they're gonna expose the COMEX and the LBMA exchanges for not having the metal and just doing paper pricing suppression. And they're gonna expose it. So I'm betting with China, not from I'm betting that gold is gonna go up. I'll just say that. Not betting with China, but I'm betting that gold's going to go up and silver. The Chinese central bank now claims to hold 2,191 tons of gold. An understatement is what most people think, and has been adding to its official sovereign gold reserves for 11 months. You can see the upward slope to the right hand here. Some people think there's a lot more gold there. And we don't know how much they own, but I think they've been understating it. And I know their citizens are also buying a boatload of precious metals. Stunning collapse in the 100-year Austrian bonds. If this chart wasn't labeled, you'd think it was a crypto meme coin. Look at the decline in the bond prices. 100-year bond prices. That's ridiculous to have a 100-year bond. But yeah, of course they're going to decline if interest rates go up like they are. This is from David. He says the next commodity surge has commenced. We believe that the commodity sector is now at the start of one of the biggest rallies in 56 years, with an expected peak in 2025 to 2027, as recently explained. Well, let's get this thing rolling. Here's Grady. He says the resumption of the commodities bull is incoming. A dream investing trading wise, a nightmare for quality of life wise for the ones not participating. Why? Because the commodities bull market is the driver behind the global inflation. Big inflation usually starts with commodities, as commodities are the inputs for all of these companies. This guy says, how high will oil prices go? Goldman and Bloomberg are already calling for $100 oil. Some are saying $150 if Iran gets involved. Joe Biden broke all of the easy solutions after he drained the Strategic Petroleum Reserve just 17 days. Then burned the Saudis over and over, who may be in the mood to help. So what is Fro? That's Frontline, a company. What are they positioning for? When order book to fleet ratios hit historical lows in a shipping asset class, next 3 years earnings outperform significantly. VLCC order book 2%, lowest in decades. So we're seeing some merging or potential mergers going through. Frontline's one of the major companies in oil tankers. And we're seeing some positioning here. And they're doing it because of the order book being so low. And the general historical movements over the next 3 years is the highest. It's earnings that are outperforming. Here's Grady again. He says, I'm not a perma bull because I post bullish big picture commodities charts. Or a gold bug because I'm bullish gold in a resumed secular bull. No, commodities are simply in a new super cycle bull market. And I'm just trying to help people get on the right bandwagon. That's all he's trying to do. I'm the same way. I'm not a perma bull on anything, but guess what? When you have charts this large, all lining up, and we're seeing it across all of commodities, we're seeing it across yields, we're seeing it across all these things. Yes, I'm going to be a bull for a long time when I need to be bullish. He said back in March, 60-year blue falling wedge. He called the false breakout. When this ratio moves up, commodities are going to outperform the stock market. Completely agree with him. It's all coming. Let's get this thing ripping. Someone asked the question, would you take a guaranteed 5.15% return on your money for the next 18 months? No, I would not. Right now, Fidelity is paying out about 5% with cash just sitting there. That's what I would do over this. I would not tie up my money for 18 months. We've got TTF natural gas ripping higher. Look at this, guys. Nice little resistance line going through here, and it is ripping higher. We squeezed up on the right-hand side. You can see it's a little like accumulation cylinder that was going on. We have this accumulation cylinder also going on in a lot of the natural gas companies that we're buying on our website. And hopefully that just absolutely rips it. Sorry, guys, for not being able to see that. It's squeezing up, and this is a little accumulation cylinder, I think, if you draw through here. And it's just ripping right now. And on the website, we've got a couple of plays that play this particular move in America. And I think that with the LNG terminals that are coming online over the next 2 years and opening up that capacity to worldwide capacity, I think Henry Hub's going to go up. And I think the markets, the overall worldwide markets for natural gas, they're going to come down a little bit, and ours is going to go up. And the biggest benefactors of this shift are going to be natural gas producers in America and Canada. Those are the two spots, in my opinion. Play that arbitrage there. This chart highlights that a recession is currently not on the menu for bond investors. Junk bonds, iShares, iBox, high yield corp bond ETF have outperformed long-dated government U.S. Treasury bonds this year. So his opinion is that we're not going to get a recession. That's what he thinks. But again, I'm going to say I don't know. I know the yield curve's inverted. I know we're in a late stage move, and maybe perhaps the stimulus money did a little bit of moving that curve faster than what it normally has done in the past. So maybe it's a false signal. I'm not saying that it is a false signal. I'm saying maybe it is a false signal. I don't really know with 100% certainty. I don't think anyone does. I'm going to stay long. Coming here, we've got gold's at the center of this global financial war playing out in front of us right now. Many in the West still don't believe or want to believe it. Everywhere else feels the power of gold on a daily basis. Ask the people in Turkey. The country has the 5th largest gold market globally, and its currency is now at all-time lows versus the dollar, and gold is nearing record highs. So in 2020, it was estimated that the Turks held between 3,000 and 5,000 metric tons of gold at home. Gold serves as a shield, protecting the value of their wealth from rapid debasement. I think this is coming to America, guys. Rapid debasement of the currency. And I think that this is going to protect it. And I think there is some paper games going on in the gold market. And you can still get this stuff for ultra cheap. I don't think it's going to last forever, though, the paper games. Dropping some truth bombs here regarding our fiscal situation. It's getting dire fast. Look at this. $275 billion was created in one day, in a day, where they created this money. I don't know where it's going. They are creating money hand over fist. You better grab some of this stuff to protect yourself against these guys and the money printing that's going on. Here's another one. Commodities do very well during war periods. From the time of Pearl Harbor until the end of the war, commodities delivered a 100%, greater than 100% return. So that's what I've got for today, guys. I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. And again, if you're interested in joining the website, you can use the word discount and coupon code. We do have a question and answer session coming up, platinum question and answer session on Saturday, 7 a.m. Mountain Standard Time. that is where you want to go if you have questions. If you're a new member, 7 a.m. Mountain Standard Time, that's when you want to show up. And you can ask whatever you want directly to me, and I pretty much basically answer whatever I can. I don't know the answer. I'll tell you I don't know. I don't try to lie. I don't try to do anything outside of my competency, so to speak. But I'll try to figure it out. Maybe I'll look into it and get you an answer. All right, guys. We'll catch you later. This is Finding Value.